What if I told you that some of your jobs are actually losing you money without you even realizing it? Here's a crazy stat. Over 60% of small business owners can't confidently say which of their service jobs are actually profitable. Wild. So think about it. If you don't know where your best profits are coming from, how do you know which jobs to sell? How do you know what you should be doing? This is something that I see often. A lot of business owners think that if they are busy, that they're profitable. And that can actually be the total opposite. Sometimes if you are busy, but you're in jobs that are losing you money, you're actually just perpetuating a cycle that's gonna get you broke faster. So some of those jobs, if they are eating up your resources, but they are draining your profits, here's what's gonna happen. At the end of the month, at the end of the job, whatever it may be, you won't actually have enough resources to start the next one because you have used all of your savings, all of your cash to make sure that you're able to cover a job that wasn't making you any money. And sometimes I understand. So you could be in a slow season and you think any money is good money. And sometimes you have to just do what you gotta do to get money in the door. But that doesn't mean that that should be your long-term plan for a profitable business. Okay, so here's what you're gonna do. Step one, you're gonna track your revenue and the direct costs related to every job. This will help you determine if that particular job was bid right and if you are maintaining good margins within each specific job. So that will be things like your labor, your time, that's the same thing a little bit, but labor, time, materials, anything that it was a direct cost of that particular job. Make sure that you are tracking that to that job so you can check back on it in the future. Step two, you're gonna factor in your hidden costs. And here are the things that people sometimes forget. So let's say you have a salesperson and you gotta pay them commission. That is a cost for that job. If you have any scheduling issues or a person scheduling the job, they are related to that. Any of those operating expenses that you need them to be part of the job in order to keep the business going, you'll want to include those as well. Are you giving any discounts, refunds? Are there any discounts or things that you have to pay if a job is not done in the right amount of time? Things like that, you want to factor that in as well. Step three, you're calculating your profit on each job. So you're going to take your revenue, take the direct cost for that job, subtract it from the revenue, and then take the indirect costs. That will leave you with the profit that is left over from that particular job. We're going to calculate that as a percentage, and that will help you determine across job to job, are you maintaining that same percentage? That's what you want to look for, not always a dollar figure. So let's say that a job brought in $2,000, but it cost you $1,400. So the profit margin for that particular job is 30%. And you should be able to look and see what your industry standards might be to see, just if you don't know what your profit margin should be, to get a good idea of where you should be shooting. Last step, you want to make sure that you are taking on the jobs that are profitable. And once you figure out which ones actually pay you better, you can start targeting those types of jobs for your business. So if you have job X that made you a 45% profit margin, but all the other ones are 30%, it's a no-brainer what you should be shooting for, right? Okay, so we've identified where your profits are, where your most profitable businesses are, and that's during the busy season. But we all know the slow season is around the corner. So how do you prepare for that? You'll find out in the next video.